Welcome to the Retirement Roundtable with John Scallan, powered by Cypress Financial.
The goal is simply making retirement something that you're excited about, not something you're afraid of.
Get more at cypressfinancial.net. Now, the Retirement Roundtable with John Scallan.
You know, John Scallan, every week here on the Retirement Roundtable, on the radio show, on the podcast, our biggest focus is income, because income is the outcome that matters the most in retirement. And John, here's a number that should wake a lot of adults up. 40% of Americans have less than $10,000 saved for retirement. But even those who've saved well face some scary questions they ask themselves all the time. What if I outlive my money? So, John, let's say I'm 62. I have $400,000 saved, but I'm terrified of taking too much out and running dry at the age of 85. How do I make that pile of money into a paycheck that lasts as long as I do?
Mark, this is the number one fear that I hear when we're meeting with clients or meeting new friends at educational events. They simply are asking, what if I live too long? Which actually sounds crazy when you think about it, but I do get it. Here's the good news is that there are 3 tools that we can use to guarantee income for life. Again, no matter how long you live, no matter how long your spouse lives, you can depend that this paycheck is going to be hitting your account every single month for the rest of your life. And let me frame it this way. Think of them as 3 different recipes for lifetime income. Each one basically solves a little bit of a different problem.
All right, John, so walk me through these 3 approaches.
First is what we call a MIGA. This is our acronym for multi-year guaranteed annuity. Think of it like, say, a CD that an insurance company issues instead of a bank. You get a guaranteed interest rate for a specific number of years, 3 years, 5 years, 7 years, 10 years, for rates that in today's interest rate environment are as high as 5.8%. Your money grows safely, and when it matures, you can take the money or convert it to lifetime payments. One other caveat. Let's say you need the income now. You can take this income from the very first month that you invest in this particular product.
What makes that different from just putting the money into a CD?
Yeah, 2 huge differences. The interest rates are usually much higher than a bank CD. And the other part is you don't pay taxes on the growth until you take the money out. For those of our listeners who have CDs that are not IRAs, these are after-tax annuities, remember this, you get that 1099 every year and you have to pay taxes on that in that following tax year. With these annuities, the interest is tax deferred. Here's another point. When it matures, you have the option to convert it to guaranteed lifetime income again, or you can take the income now. Banks simply can't do that. And Mark, with today's interest rate environment, we're seeing MIGA rates that we haven't seen in almost 20 years. It's actually an incredible time to lock in these high guaranteed returns.
All right, so we're talking about some of the opportunities for income in retirement. What's the second one, John?
Mark, the second type is called fixed indexed annuities. We call these FIAs. Now, this is where it really gets interesting. Your money is linked to market indexes like the S&P 500. But here's the magic. When the market goes up, you get a portion of that gain. In many cases, it can be as high as 10 or 12%. If the market crashes or we have a significant pullback, here's the key. You lose absolutely nothing. 0. Your account value never, ever goes backwards.
So that sounds almost too good to be true, John. Is there a catch?
Mark, the trade-off is you don't get all of the market gains. Let's talk about 2024. The S&P 500 got as high as 23% in the return for the entire year. In that particular scenario, you would get what's called the cap on the fixed indexed annuity. Again, 10 to 12%. Now let's back up to 2022. The S&P 500 lost 23%. Guess what? If you owned a fixed indexed annuity, you lost nothing. So the trade-off works like this. The insurance carrier said, listen, you can participate in these indexes, but we're going to cap how much you can make. However, if the market has a correction, even if it loses 2 or 3%, you lose absolutely zero.
So what's the third type of guaranteed income that we can have in retirement?
Great question. Again, this is my favorite for people worried about lifetime income. These are fixed indexed annuities with income riders. Some downside protection, the same downside protection as a regular FIA, but we add a special rider that creates an income bucket that grows again as high as 9.5% compounded annually, in some cases for up to 12 years. Now, keep in mind this compounding effect to the income rider. This 9.5, with, by the way, is with one of the largest insurance carriers in the world, this goes up regardless of what the market does.
So how does that income account really work, John?
Let's say you put $100,000 and the income amount is guaranteed to grow at that 9.5. Well, let's use 7%. Let's be conservative. At 7%, after 10 years, you'd have $196,000 in the income rider bucket. At that point, you raise your hand, you say, let's turn the income on. And at that point, your lifetime income payments are based on which number is higher. Is it your cash accumulation bucket or is it your income rider bucket? Whichever one is higher, that's the bucket that you'll be pulling from to get you lifetime income. Mark, even if you live to 100 years old, these payments never, ever stop.
But what if somebody needs that money before the lifetime income is ready, John?
Great question again, sir. That's why we never put all of someone's money in these products. Listen, we're huge believers in having liquidity. We're huge believers in having an emergency fund outside of these fixed indexed annuities that can carry you through those times. Let's say it's a natural disaster or an illness with a family member. You've got places to go to get that money. But with FIAs, you can also take up to 10% per year without penalties. And remember, this isn't about locking up all of your money. It's about creating a guaranteed income stream that you can never outlive.
So for those adults out there that are worried about income in retirement, they're losing sleep because they're worried about running out of money and having money that lasts as long as they do, which approach would make the most sense?
Mark, I got to go biblical here on you. God always said you need 2 ears and 1 mouth. When we sit with a client, when we meet a client, when we have an initial interview, an annual checkup, whatever it is, we talk about what makes sense. Are you looking for accumulation? Are you looking for guaranteed income? Are you looking for a product that may have a long-term care rider? These are the questions that basically help you understand what may be the best product for you in your particular situation. Here's what I tell people. Social Security and pensions could be disappearing. You need to create your own pension. These 3 tools do exactly that. The insurance company takes on the risk. If you live too long, not you. Call us 504-732-1037. 1001. You can always email us at info@cypressfinancial.net. We're easy to find at cypressfinancial.net. Let's build your personal pension plan together.
Investment advisory services offered through Cypress Financial Group, a registered investment advisor firm. Registration is not an endorsement of the firm by securities regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Cypress Financial Group, John Scallan, Louisiana Insurance License Number 1064997. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Cypress Financial Group. Read your contract for restrictions, limitations, or penalties.